It is 7:42 a.m. Pacific Daylight Time. It is the first day of August 2025. This is episode 1138 of Bitcoin, and it may be just a slightly shorter show today. I've got some stuff to do, but we have news, and this is where you come for the news you can use. This is the Bitcoin And Podcast. I'm your host, David Bennett. If you needed to know what the hell was going on with Bitcoin or, adjacently related news stories that have to do with the economic factors of Bitcoin, well, you've come to the right place. We'll just start out. Let's just dive right in, because Strategy, formerly MicroStrategy, just shocked the crap out of Wall Street. I don't think anybody's ever seen this before, but Strategy released their numbers yesterday. Their earnings call seems to suggest, and I have no reason to believe that they're lying, but Strategy has a 46,671% earnings per share beat, fueled directly by their Bitcoin treasury strategy. Guess it's working. Nick Ward has it for Bitcoin Magazine. Strategy delivered a second quarter earnings call that demonstrated more than financial results. It revealed a robust and deliberate treasury architecture designed to make Bitcoin the centerpiece of shareholder value creation. The call was dense with insight into how a public company can re-engineer its balance sheet, capital structure, and market signaling to outperform traditional fiat-based treasuries. So here's the second quarter 2025 highlights. 628,791 BTC in reserves, which is over 10 times larger than the next corporate holder at an average cost of a mere $73,277 per BTC. They have a 25% Bitcoin yield year to date, outpacing Bitcoin's own appreciation. I know. Don't gag. Hey, this isn't going away. You might as well know what the hell's going on. Earnings per share of $32.60, beating expectations by 46,671% and up 5,819% year over year. The forecasted 2025 net income of $24 billion, which would be number 13 in the S&P 500, while trading at just 4.7x earnings, which is the 495th place in the S&P 500, with a number 96 market cap rank, also, I'm assuming, in the S&P 500. Man, those are some numbers, dude. I mean, you kind of can't look away. As much as it, and a lot of people really want to hate Strategy and Michael Saylor right now, I'm looking at these numbers going, well, the numbers kind of don't lie. That doesn't mean everything's all hunky-dory. Clearly not. We're having some retracement this morning. We went down to something like 114,000, but I can't look away at these numbers. I just can't. I'm looking at these numbers going, holy shit. I've never seen anything like this before. But despite these extraordinary results, Strategy continues to trade like a mid-tier software firm. Markets still fail to fully value its transformation into the world's largest Bitcoin treasury company, a message it is sending directly to the S&P 500 committee with these numbers. Bitcoin per share is now Strategy's defining KPI, or I guess key performance indicator, and its growth tells a story that fiat accounting metrics cannot. A 25% increase in BPS year to date means every shareholder owns materially more Bitcoin exposure than they did just 6 months ago, and it was achieved through disciplined capital issuance, aggressive Bitcoin acquisition, and a refined playbook that compounds exposure over time. For executives, this shifts the conversation around treasury entirely. The metric of success is no longer how much fiat sits idle or earns negative real returns, but how effectively balance sheet capital can be converted into the world's scarcest monetary asset. Hopefully, if I remember, I want to come back to that. Strategy's suite of preferred securities continues to set new standards for capital market engineering. STRC, which Michael Saylor described as our iPhone moment, is designed to open the door to wider investor base seeking yield and stability. The long-term advantage of these instrumentations is profound. Dividends are fiat-denominated and fixed. Proceeds are converted to Bitcoin immediately, appreciating over time. Even with an 80% Bitcoin drawdown, preferred dividends remain safe, showcasing resilience under extreme stress scenarios. The model exploits the mismatch between fiat liabilities and Bitcoin-denominated assets, stacking odds in favor of long-term accretive growth. It creates a structural advantage that strengthens Strategy's balance sheet every time a preferred offering closes. Preferred securities are not just funding tools, they can be designed to asymmetrically benefit shareholders when tied to Bitcoin, with liabilities locked in fiat and assets compounding in a harder currency. So Strategy introduced MNAV-based ATM thresholds, ATM being at the market, giving shareholders unprecedented clarity on when equity issuance will occur. So below 2.5x MNAV, no issuance except for debt service or preferred dividends. Between 2.5 and 4x MNAV, you have opportunistic issuance for Bitcoin accumulation, and above 4x, active issuance to accelerate accumulation. This guidance turns a historically contentious topic, dilution, into a predictable rules-based process directly tied to Bitcoin per share growth. It signals the management will not arbitrarily issue stock aligning long-term shareholder interest with treasury expansion goals. And for executives, this demonstrates how transparency transforms capital strategy into a competitive advantage, earning market trust and reducing friction around equity programs. In the second quarter, Strategy raised $6.8 billion, followed by another $3.7 billion in July, including STRC's landmark IPO. This funding pipeline converts market demand for securities into Bitcoin holdings at scale and unconstrained by free cash flow limitations. The approach demonstrates that capital structure is no longer static. It can be a living system designed to channel investor appetite into treasury performance, compounding exposure to Bitcoin quarter over quarter. For CFOs and boards, this illustrates how corporate finance can evolve from static balance sheet preservation into active balance sheet engineering, leveraging market mechanisms to accumulate superior assets. The Q2 results put traditional fiat treasuries on notice. Idle reserves are a liability when compared to engineered Bitcoin exposure. Tailored securities can unlock entirely new pools of capital for treasury growth. And 3, transparent frameworks for issuance build durable investor trust. This quarter, Strategy didn't just report numbers, it demonstrated a replicable model that rewrites the standard for corporate treasury management in a Bitcoin native world, and companies that fail to study and adapt this model risk structural underperformance in attracting capital, retaining shareholder confidence, and preserving long-term value. There is actually a lot more than meets the eye in this second quarter earnings report. Now, I've touched on it a couple of times, but what Michael Saylor is essentially doing is he seems to be one of the only people, and look, praise where praise is due, okay? I promise you I am not a Saylor fanboy, but I got to give praise where praise is due. He said, why aren't we doing anything with our balance sheet? How can we leverage this thing? How can we leverage cash on hand? When all these other companies seem to just say, oh, here's our profits for the year. Let's stack it in a savings account and we'll just keep it. And maybe we'll make some investments, but they're not that's not leveraging it. That's using the fundage directly to purchase whatever, stocks in other companies, getting into hedge funds. That's not leveraging. That's not taking your balance sheet and say, well, wait a minute. Instead of using our balance sheet to buy other assets, how about we borrow against our balance sheet and then use that money to buy really good assets? And in this case, a single asset, and that would be Bitcoin. Only a handful of companies are doing it. And again, credit where credit is due. Saylor figured it out first. He did. He was the first one to do it. So at this point, treasuries of all other companies, and I'm not talking about Bitcoin treasury companies, I'm talking about the treasuries of Apple, the treasuries of Microsoft, the treasuries of mom and pop's iced tea stand, whatever it is. If the company itself has a balance sheet that is in the black and positive, what are you going to do with that money? How are you going to leverage that balance sheet? It looks like we've got a pretty good model here because he did very, very well. These numbers, again, nothing to sneeze at. And I want to come back to this that I highlighted earlier. For executives, this shifts the conversation around treasury entirely. The metric of success is no longer how much fiat sits idle or earns negative real returns, but how effectively balance sheet capital can be converted into the world's scarcest monetary asset. Now, that very last part, the world's scarcest monetary asset, this is actually, I don't even have to worry about the Bitcoin part of this. This is somebody who's like all of the other companies, as I've said, they just, like Apple has, I can't even remember how much money they have on their balance sheet. And it just sits there. It's completely unleveraged. They're missing the boat. Now, Bitcoin should be the asset that they buy, but I don't see Apple issuing shares at a dividend or a premium or some kind of preferred stock option against their balance sheet to raise money to buy any other asset. Not just Bitcoin, anything else. Art. I don't know, a whole shitload of Lamborghinis. Who cares? It doesn't matter. This is the point. Michael's not using the cash on hand to actually buy stuff. He was, but now he's full-blown debt instrumentation, the issuance of brand new stock offering products to raise direct funds to actually buy more physical Bitcoin. And it's worked so far. I mean, how to say it? I'm always going to be skeptical after BlockFi and FTX and Celsius and Alameda Research. After all that shit happened in 2022, I'm not just going to sit here on my ass and go Saylor, and everything's going to be fine. Nobody can promise that. But I got to tell you, man, these numbers, the numbers don't lie. And neither do the numbers for Ray Dalio. And yes, I talked about Ray Dalio yesterday. This is not that story. This is a different Ray Dalio story from Helen Part's Cointelegraph. Ray Dalio sells the final tranche of his Bridgewater stake after predicting debt collapse. Billionaire investor Ray Dalio has finally said his goodbye to Bridgewater Associates, a hedge fund that he founded 50 years ago. Dalio sold the last remaining stake in Bridgewater and stepped off of its board after buying Dalio shares. Bridgewater reportedly issued brand spanking new shares to the Sovereign Wealth Fund of Brunei in a multi-billion-dollar deal that brought in almost 20% stake in the company. Dalio took to X on Thursday to say that he was thrilled to be passing along Bridgewater to the next generation, adding, "I love seeing Bridgewater alive and well without me, even better than alive and well with me." Dalio's latest Bridgewater sale marks the final chapter of his journey at the company he founded out of a 2-bedroom apartment in 1975. The 75-year-old billionaire stepped down as Bridgewater CEO in 2017 and then quit as chairman before the end of 2021, and known For successfully predicting the 2008 economic crisis, Dalio has repeatedly forecasted more collapses, predicting a global debt crisis in late 2024. Quote, when a country is overloaded with debt, the preferred path is to lower rates and devalue the currency. So it is worth betting that this is exactly what will happen, end quote, the veteran investor said on X last Wednesday. He also predicted that the U.S. economy is at risk of facing an economic heart attack if the government does not reduce the budget deficit to 3% of GDP. While expecting more economic challenges amid deglobalization and unsustainable trade imbalances, further escalated by the Trump administration's tariff disruptions, Dalio has repeatedly recommended Bitcoin and gold as major tools to hedge against the crises. In late July, he recommended investors allocate up to 15% into Bitcoin or gold to optimize for the best return to risk ratio, significantly increasing his previous advice that was up from 2%. Although Dalio has gained the reputation of a market oracle after predicting the 2008 crisis, many of his other economic forecasts have attracted criticism. In 1982, Dalio predicted that the global economy was headed towards a depression, which proved to be false, causing massive losses for Bridgewater. Dalio later admitted that he was dead wrong in both his forecast and the trading strategy that followed, revealing that his misjudgment nearly bankrupted him. Wow, that's not good. As Dalio warns that the U.S. may be the next country to go broke, skeptics increasingly highlight many flaws in the track record of his economic predictions, such as overgeneralization, confirmation bias, and lack of temporal clarity. And there was a couple of other things that Dalio did here. That's the end of the article, but there's a list here. It's got a couple other things on it. Aside from the 1982 depression forecast that he was wrong about, he was clearly wrong about a 2015 recession warning when Dalio compared the U.S. economy to 1937 and no recession occurred, and then markets actually hit record highs. Then the repeated debt crisis alerts from 2012 through 2024. Despite consistent warnings, the global financial system has remained surprisingly resilient even through COVID. Yeah, that's what happens when you print a shitload of money. I think Dalio's actually right, and it seems to me that he's positioning himself to, I don't know how much Bitcoin he owns, but it looks to me like he's trying to reduce his exposure to generalized global markets. We'll have to see. We'll have to see if he's right. If he's got enough cash, maybe he can put it into a Leathermint wallet. That's right, Leathermint. He's in the Circle P. He's the Circle P vendor of the day. He builds wallets, he builds belts, he builds all kinds of stuff. And he has some of the most gorgeous 100% genuine leather goods that I've ever seen in my entire life. And he's even tooled a book cover for the Bitcoin Standard. It is a very, very nice looking hardcover made out of leather. It's absolutely gorgeous. But really, where this dude shines is the wallets and the belts. But specifically for me, what he makes more than wallets. I'm going to look at this yardage book cover. Do you golf? Do you need something to put your little scorecard in? Get the yardage book cover, Cordovan leather, a refined essential for the golfer who values precision and presence, handcrafted from rare shell Cordovan. Its surface gleams with natural luster, aging with grace over time. It's durable, elegant, and unmistakably noble. It's built to outlast seasons and trends alike. And I got to tell you, man, I'm looking at the cover of this thing. It's like this cross between really dark brown and lighter tobacco that's kind of swirled together. It's freaking gorgeous. And of course, you can always buy it in Bitcoin, because if you're not selling your goods and services in Bitcoin, you're not in the Circle P. The Circle P is where I bring plebs with goods and services for sale to you, other plebs that might want to buy goods and services from fellow plebs, so that we can support each other in this new Bitcoin circular economy. Go to theleathermint.com. That is theleathermint.com. Pick yourself up a yardage book cover, or if you don't play golf, look at his belts, look at his watch bands, look at his wallets. All of these things are beautiful. And the best part, again, and I cannot stress this enough, is the stitching, because it doesn't matter how good the material a wallet is made out of. If the stitching sucks and it falls apart, all you have is flaps of leather, and that's not going to do you any good. By the way, you can turn the yardage book cover into a signing device. He will put a SATS chip from CoinKite directly inside, and you can just tap and pay right at the clubhouse when you're buying your beer, after you've smoked your best friends on the course all day long, and you can sit back, look at them and say, you should have bought Bitcoin. Just saying. Visa has added yet more stablecoin features. They're unveiling Avalanche and Stellar support. I am so sorry to bring you shitcoinery, but we've got to start tracking what the major credit card companies and other legacy financial institutions are doing. Where are they going? What are they looking at? Matt DeSalvo seriously suggests that Visa's looking straight into the mouth of shitcoinery. He's writing it for Decrypt. Visa said on Thursday that it will expand its stablecoin settlement capabilities, adding support for 3 additional digital tokens and 2 new blockchain networks. The payments giant said that its infrastructure now supports PayPal's PiUSD, Paxos issued USDG, and Circle's EURC. So that would be Circle's European Union version of their shitty ass stablecoin. Visa also said that clients using Visa stablecoin services can accept tokens via Avalanche and Stellar as well. Previously, Visa stablecoin services were limited to blockchains Ethereum and Solana. Avalanche is a crypto network behind AVAX, the 22nd largest digital asset by market cap. I kind of don't give a shit. It's just another shit chain. Quote, we believe that when stablecoins are trusted, scalable, and interoperable, they can fundamentally transform how money moves around the world. Visa's global head of growth products and strategic partnerships at Visa, Rubail Birwadkar, it's a weird last name, said in a statement, stablecoins, they describe stablecoins, and we don't need it. Banks, major companies, including Meta, Amazon, reportedly, and even U.S. states are all interested in issuing their very own stablecoins, which are supposed to accelerate payments using blockchain technology. And earlier this month, President Trump signed the Genius Act into law, making the first comprehensive federal framework for the issuance and regulation of stablecoins in the United States. In 2021, Visa announced that it had support for USD Coin on Ethereum, and since then, the company has introduced a number of other crypto-related ventures. In April, it partnered with Bridge, a unit of payment services provider Stripe, to offer stablecoin-linked debit cards in Latin American countries. So in one way, Visa knows what's going on. They're gonna hitch themselves to Latin America, which you should. Right? That's part of my global focus is Latin America. The fact that they're looking at expanding their shit chain offerings is disturbing, but what did you expect? This is what's going to happen. It's not going to get any better. Meanwhile, we're going to run your numbers. CNBC futures and commodities. Stocks are just getting pounded. Lots of stuff is getting pounded today, man. But part of it is the fact that we had a really weak jobs report. Jobs numbers came in today at like 73,000, and the Bureau of Labor Statistics was, I guess all the analysts were expecting much higher, and it's taken the energy industry down with it. Oil is down 2.8% to $67.32 a barrel. Brent North Sea oil is down 2.82% to 69.66. Natural gas crawling sideways but into the red at $3.10 per thousand cubic feet. Gasoline is down just over 3 full points to $2.10 a gallon. Shiny metal rocks are having a good day. Gold is up 1.5% to $33.98 and 5 dimes. Silver is up 0.7. Platinum is up 1.15. Copper is up 1 1/3. Palladium is up just over 1 full percent. Ag is mostly in the red today. Biggest winner is going to be soybeans, 0.5% to the upside. Biggest loser is chocolate, 2.6% to the downside. I got live cattle at down 1/4. Lean hogs are down 1/2, and feeder cattle are down 0.17%. And here comes the bad news, for at least for legacy markets. Dow is down 1.4%. That's 637 points to the downside. Very much so in the red. S&P is down 1.72%. NASDAQ is down almost 2 full points. And the S&P Mini is down 2.16%. And Bitcoin took a hit too, man. $115,120 is where we stand right now. That's a $2.29 trillion market cap, and we can only purchase 34.3 ounces of shiny metal rocks with our 1 Bitcoin, of which there are 19,900,135.2 of. And average fees per block are low, 0.03 BTC on average in fees on a per block basis. Mempools are actually healthy today. The high priority is going to get you in at 9 Satoshis per VByte, and low priority is going to cost you 6. There are almost 50,000 unconfirmed transactions sitting in like 45 blocks. I haven't seen mempools this full in like months, honestly. So there is all manner of activity that is going on today. Now, from Unholy Matrimony, which was yesterday's episode of Bitcoin, and I got Psyduck with 737 sat says, Psyduck. Turkey with 500 says nothing. God's Death with 237 says, thank you, sir. No, thank you. Permanerd with 210 says, or you can use both to kill the shit out of somebody. And I can't remember what it was that I said yesterday that he was referring to, but sure. Okay, just don't get caught. Pies with 100 says, thank you, sir. No, thank you. And that's the weather report. Welcome to part 2 of the news that you can use. Let's go down into Latin America, down south to El Salvador, where constitutional reforms have been approved for unlimited presidential re-election. Woo! That's probably not good. But according to the Associated Press, El Salvador's parliament has indeed approved constitutional amendments enabling unlimited presidential re-elections, paving the way for President Nayib Bukele to remain in power with no time restrictions. Okay. The decision passed with 57 votes in favor and only 3 against by Bukele's Nuevas Ideas Party and its allies. It marks a turning point in the political history of the Central American country. The package of 5 reforms reshapes El Salvador's institutional framework. The presidential term is extended from 5 years to 6, and the electoral runoff is now abolished. Oh, God damn it. Wow. The political opposition has condemned these reforms as the end of democracy in the country. Deputy Marcela Villatoro from the Nationalist Republican Alliance Party voiced strong concerns. Quote, you don't realize what indefinite re-election brings. It brings an accumulation of power and weakens democracy. There's corruption and clientelism because nepotism grows and halts democracy and political participation, end quote. Government lawmaker Ana Figueroa proposed shortening Bukele's current term by 2 years, making it end on June the 1st, 2027 instead of 2029 to synchronize presidential and congressional elections. She justified the changes by arguing that eliminating the runoff will save about $50 million per election. El Salvador's stance remains under international scrutiny, according to the, of course, International Monetary Fund. Following a $1.4 billion loan agreement signed in December, El Salvador has halted its Bitcoin purchases. I'm not exactly sure if they've actually halted their Bitcoin purchases, but that's not my concern right now. This is concerning. I have kind of always liked Bukele, but this is a dictator move, man. It's a dick move, right? It's a dictator move. It just is. And I can like them all I want, but this shit, no, man, there ain't nothing about this is good. It's just not. And I'm saying that coming from a position where I was kind of really concerned. Well, what happens if Bukele, because before this occurred, this was his final term. He was elected that one time. He had a 5-year stint. And then now he's been elected again, and nobody was sure that was even constitutional as far as El Salvador was concerned. But he's president, so there you go. I guess enough people said, okay, it's fine. So he's in his second term, and that was supposed to be his last, and now it's not going to be. But I was concerned that whoever took over as president of El Salvador, if it was the same party, Nuevas Ideas, then the Bitcoin holdings would probably be safe. Now, who knows? Who knows what the hell is going to happen? If he really has halted his daily purchase of Bitcoin, then what the hell's going on with the IMF? And this is a question that's never been answered for me. Why does he need any kind of involvement of the IMF? I've asked the question before. I've never been able to figure it out. Nobody I know understands why he needs $1.4 billion when he's taken that country and turned it completely around. Tourism is through the roof. Nobody used to nobody in their right mind anyway would go vacation in El Salvador 10 years ago. That's not hyperbolic. You wouldn't touch that country with a 10-foot pole, man. El Salvador was one of the most dangerous places on the face of the planet. Not anymore. Not anymore, man. Bukele turned that whole place around. So why does he need $1.4 billion? How come you've already bootstrapped your country from the murder capital of the world to a place where people want to go? What are you trying to accelerate? This is the kind of human attitude I've never understood. Why does everything have to be so blindingly fast that we end up with Kentucky Fried Chicken, Taco Bell, and McDonald's everywhere and calling it fucking progress? It's not progress, man. That's I don't know. I don't want to get on a soapbox about it. But speaking of El Salvador, I want to mention my good friend, Daniel. If you don't know who I'm talking about, he's the host of the Once Bitten podcast. It's a Bitcoin podcast. And generally, you don't talk about other people's podcasts, but I've been on Once Bitten twice. And if you're not listening to that show, you're kind of missing out. He doesn't do news. He does full-blown interviews, right? He doesn't do a daily show. He does like a weekly show. Sometimes he drops like two shows in a week. But one of the things that I love about Daniel is he's able to kind of like crawl around and ask the questions that kind of need to be asked. And he's got an infectious enthusiasm about the interviews that he does. And I just absolutely love being on his show. I will be dropping a link to his latest episode, El Salvador Property and Expat Consultancy. So he's talking to a couple that consults businesses and expat businesses, and expat means, you're an expatriate. You've moved away from your country of origin. And in this case, you've either moved or spending enough time in El Salvador that you might as well, be considered a local now. there are real issues involved with changing your tax jurisdiction. And none of us like taxes, but they do exist. And if you don't do this right, all kinds of bad crap can happen. So Lexi and Kimbura, I don't know if that's exactly how you pronounce it. They've got this consultancy business, and they're being interviewed by Daniel on Once Bitten. If you were thinking about maybe picking up stakes and moving somewhere else, whether it's El Salvador or something else, I guarantee you that this episode has something for you. I will be dropping the link to this particular episode into the show notes. But again, it's Once Bitten, a Bitcoin podcast. One of my favorite people, one of my favorite podcasts to be on. I love being invited on that show. Please, please, please go listen, go like, go subscribe. Drop him a 5-star review on Apple Podcasts, and while you're at it, do one for me too. Anchorage Digital Bank acquires 10,000 BTC. It's worth $1.19 billion at that purchase price. Holy shit, Bitcoin News. Alex Larry is writing, Anchorage Digital, a U.S. federally chartered digital asset bank, has acquired 10,141 Bitcoin worth around $1.19 billion in just 9 hours. And it's a big deal, showing institutions are getting serious about Bitcoin. Well, I think we kind of knew that there, Alex. The transactions were first spotted by blockchain intelligence firm Arkham. And although Anchorage hasn't officially confirmed buying it, all signs point to this being a hefty purchase by the digital asset bank. The Bitcoin was moved into an address labeled Anchorage Digital from multiple sources, so the bank likely used over-the-counter trading to avoid big price swings. This is a common practice for large institutions when buying or selling large amounts of Bitcoin. Institutions usually don't use public exchanges for big buys to avoid price movements and to get a better deal, and the Bitcoin is now likely and hopefully in cold wallets with multi-signature protection offline, which is standard practice for regulated custodians like Anchorage. It's a big moment for mainstream Bitcoin adoption because experts think it means large financial players are starting to believe Bitcoin is here to stay. The acquisition makes the scarce digital asset more credible as an investment option for big financial institutions. Well, yeah, I think we can just go ahead and skip the rest of this stuff simply because the news here is that in the midst of MicroStrategy having like 46, whatever it was, 56,000% increase in whatever year-over-year metric, and you got Anchorage Digital buying 10,000 BTC, we're still seeing sell pressure. And it's very, very bizarre because all the numbers from around the world, these all look good for Bitcoin. And yet here we are with price depression as we start August. And I mean, it's not hair on fire kind of stuff. And I don't think anybody should make stupid mistakes like sell all your Bitcoin because you're scared. But I still have to ask the question, it's sort of like WTF moment for me, man. Anyway, let's move on because Metaplanet plans a $3.7 billion stock rise to fuel a massive Bitcoin buying spree. Again, this news dropped today, August the 1st, and it's from decrypt.co. Vismaya V is writing it. Metaplanet announced on Friday that it has filed to raise $3.7 billion through a massive stock offering to fund one of Asia's largest corporate Bitcoin accumulation strategies. The Tokyo-listed investment firm filed a shelf registration effective from August the 9th, 2025, until August the 8th, 2027, allowing it to issue securities in portions when market conditions align. I guess that means a high price for Metaplanet stock versus a lower price for Bitcoin spot. Who knows? But the proposed raise represents approximately 75% of Metaplanet's current market cap of $4.9 billion. Wow, you want to talk about going all in? Take 75% of your market cap, borrow against it, and buy Bitcoin. Holy crap. Quote, the company intends to actively pursue equity financing as part of its Bitcoin strategy, Metaplanet said in the filing. Quote, we believe that introducing Bitcoin-backed preferred shares represents a pioneering effort to fill the gap, end quote. This capital raising effort supports Metaplanet's previously announced goal of accumulating 210,000 BTC by the end of 2027, a target that would require the company to increase its current holdings more than 12-fold. The company currently holds 17,132 BTC, worth over $1.97 billion at a price of $114,396, following its most recent purchase of 780 BTC, and that was just a few days ago on July the 28th. The proposal involves establishing two new classes of perpetual preferred shares, Class A and Class B, each with potential issuance values of $1.9 billion each. These shares would offer dividend payouts of up to 6% annually, taking priority over common shareholders, with all proceeds earmarked specifically for Bitcoin acquisitions. However, the company cautioned that, quote, no specific plan for the issuance of the preferred shares is currently in progress, and it is uncertain whether such issuance will take place. So are you going to do it or not, dude? The proposal also requires increasing authorized shares from 1.6 billion to 2.723 billion, which shareholders will vote on at an extraordinary general meeting scheduled for September the 1st. Metaplanet's approach follows that of strategy. Yeah, we know. Despite current market conditions, QCP Capital shared in its latest report that ongoing accumulation efforts by companies like Strategy demonstrate long-term conviction. However, the firm cautioned that price action failing to respond to positive headlines represents textbook late cycle behavior. So they're sort of answering what I was saying. We've got all these numbers that are pointed in the right direction around the world, macro, globally, you name it. You've got every company in the world trying to buy as much Bitcoin as they possibly can, and yet the price action fails to respond. And they're saying that, or QCP Capital is saying that this is a textbook late cycle behavior. Late cycle being we're at the end of the bull market. Do I believe it? I don't know. I'm not a technical analyst. I don't do that kind of thing. I don't make price predictions on this show because I don't think they're worth anything. 1 Bitcoin equals 1 Bitcoin. That's my price prediction. You want to stack sats about it? Then you probably should. Now, last up for today, Coinbase discloses 2,509 Bitcoin acquisition in the second quarter to re-enter the top 10 public Bitcoin treasury companies, and puts them right ahead of Tesla, according to James Hunt, out of the block. Coinbase's long Bitcoin CEO Brian Armstrong declared on X following the crypto exchange's second quarter earnings report late Thursday, disclosing that it had bought an additional 2,500 BTC during the quarter at a cost of approximately $222 million. That takes the firm's total Bitcoin holdings to 11,776 BTC. 1776. I like that. As of June 30th, bought for a total cost of $740 million. Quote, our holdings increased by 2,509 BTC, and we keep buying more, Armstrong said. Coinbase's latest declared addition takes it back to the top 10 public Bitcoin treasury companies, leapfrogging Elon Musk's Tesla, whose holdings remain at 11,509. According to Bitcoin treasuries anyway. Strategy, Mara, Tetherback 21, Atomback and Cantor Fitzgerald-backed Bitcoin Standard Treasury Company, Riot Platforms, Trump Media and Technology Group, Metaplanet, Galaxy Digital, and CleanSpark make up the remainder of the top 10. With 628,791 BTC, 50,000, 43,000, 30,000, 19,000, 18,000, 17,000, 12,000, and another 12,000 Bitcoin, respectively. Coinbase previously sat on 9,276 BTC at the end of quarter one, ranking it in 13th place before Thursday's disclosure. Coinbase also unveiled plans on Thursday to become an everything exchange for the United States, aiming to offer tokenized stocks, prediction markets, and early-stage token sales on-chain. The move would bring Coinbase into competition with platforms like Kalshi and Polymarket in the prediction market space, as well as challenge Robinhood, Kraken, and Gemini on tokenized equities. According to VP of Product Max Brandsburg, the goal is to let users trade all asset types in a unified on-chain experience, with the expanded offerings expected to launch in the coming months. That announcement came alongside Coinbase's earnings report for the second quarter, which confirmed a $307 million loss. And that was linked to its major data breach earlier this year, where offshore customer service representatives were reportedly bribed to leak sensitive user data. Meanwhile, spot trading volumes and revenue dropped significantly from the first quarter as expected, with crypto spot volumes down 30% quarter over quarter to $237 billion, total revenues declining 26%, and transaction revenue dropping 39%. Still, net income surged to $1.43 billion, up sharply from $66 million in the previous quarter. Pause. So their net income quarter over quarter surged from $66 million to $1.4 billion in a quarter. I don't know, man. I smell something fishy, but they're saying here that that's thanks to the strength of Coinbase's broader business lines, including its role in exchange-traded fund custody and its Ethereum Layer 2 network Base. Oh, God, I don't even want to talk about Base. Coinbase shares closed flat on Thursday at $377.76. 76 keeps coming up with these guys, according to the Block's coin price page. However, it subsequently slumped 11.5% after hours and is currently changing hands for a pissant measly ass $334.92 in pre-market trading on Friday per trading view. So there you go. That's all the news that you can use. I hope you enjoyed the show. Like I said, it is a little bit shorter today, but you know, it is what it is, and I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.